Indian corporations have some of the world's largest businesses, the largest of which are worth hundreds of billions of dollars in market value, with revenues exceeding $106 billion with its largest corporation. India's stock market, which is the basis for understanding the valuation of these corporations, is also now being chased after by global investors. They are pouring money on top of money buying stock and equity ownership into Tata businesses, Reliance Industries, Indian banks, and so much more. However, there are still doubts about Indian companies. Just take a look at the recent issue with the Adani Group and Hindenburg Research. In 2023, they published an article detailing how the Adani Group is pulling the largest con in corporate history. They claim that the Adani Group is manipulating its stock and accounting fraud schemes. But the most important factor here is the claim of stock manipulation. You see, stock manipulation happens when certain individuals intentionally influence the price of a stock through deceptive or fraudulent means. This manipulation can take various forms, ranging from spreading false information to artificially inflating or deflating the stock's price through coordinated buying or selling. If, for instance, a company has been pushing its stock valuation too much, it can then signal that they are overvalued, whether it be through deceptive means or even just through market sentiment. This is where we want to understand Indian corporations. Are they really big because of the fundamentals that drove their business? Or to put it simply, are companies like Tata Group, Reliance Industries, and Adani Group actually worth billions of dollars because they deserve to be worth that much? Or are they too overvalued? Well, to understand this, let us see how valuable India's largest corporations are and compare them to other countries. The first and most important Indian business listed in the stock exchange is Reliance Industries. Reliance Industries is the largest corporation by market capitalization in India. As of the time of this writing, they have a market cap of about $231.72 billion US dollars. This makes them the 45th largest company in the entire world. Being the 45th largest corporation by market value is no joke. To put it in perspective, they are larger than Shell, which is a global leading oil and gas business with a market value of $212 billion. They are larger than PetroChina, which has a market value of $216 billion. They are even larger than McDonald's, which has a market value of $201 billion. That's just how big Reliance Industries is by market cap. Now, as we noted earlier, market cap, or how much the company is valued, is sometimes different from what the company actually produces. A company could be worth $100 billion, but its sales can be a mere $1 billion. So, how does Reliance Industries hold up? Well, let's see the income and balance statements. Their revenues, which are the company's sales, is about $106 billion for the year 2023. This shows that the company's worth is twice its annual revenue. Now, let's see how much they earn from their sales, or their net income. For 2023, it's about $12.23 billion, which shows that their actual net income is far, far from their market value. That is neither bad nor good, as it doesn't tell the whole story so far. But the next important factor is Reliance Industries' assets and liabilities, which is what they own and what they owe. Now, they own a lot of assets. These range from lands to overseas and local corporations. In its 2023 balance sheet, they own over $202 billion. But like how they own assets, they also have liabilities. Liabilities are what they owe. It could be debt, for instance. In the same period, they have a total liabilities of $96 billion. Okay, now that we have an understanding of how these work, let's take a look at other Indian businesses. Another large corporation is the Tata Consulting Services. It has a market capitalization of $184 billion, making them the 67th largest company. They have sales of $28.9 billion and net income of $7.4 billion. Their assets are at $18.6 billion and their liabilities at $6.44 billion. Now, these figures are so far from Reliance Industries, yet they are nearly as big as Reliance Industries in market cap. Why has this been the case? Well, there are reasons for this. It can be due to market sentiment. Investors are just valuing TCS at such a high valuation. It could also be because TCS has a bright future and has been growing steadily over the past few years. In 2012, TCS had sales of just $11 $11 billion. 10 years later, in 2022, it grew to over $27 billion. This growth is favorably seen by investors. Now, we also can't rule out that TCS may be a bit overvalued. How can a company generating $28 billion and have a balance sheet yet worth nearly as much as Reliance Industries? That's one of the many millions of questions about stock valuation. For now, let's take a look at another corporation in India, Tata Motors, which is the famous Indian company that bought Jaguar and Land Rover. Tata Motors has a market value of about $41 billion, making them the 460th largest corporation in the entire world. That is now far from both TCS and Reliance Industries. But Tata Motors has larger balance and income statements than TCS. Tata Motors has sales of over $50.9 billion, nearly double than that of TCS. They have net incomes of about $2.77 billion, which is lower than TCS. Their assets are worth $41 billion and liabilities stand at $34.4 billion. Now, Tata Motors has higher sales and assets than TCS, yet is valued far lower than the company. Why has this been the case? Again, it's all in the market sentiment. A corporation is valued accordingly to the market and investors. Maybe they just don't see Tata Motors to be as valuable as TCS. Let's now compare India's largest corporations to other global businesses. Then we can not only compare local Indian companies to each other, but also to other countries. One of the common comparisons to Indian businesses is none other than China. Chinese corporations should undoubtedly be larger than Indian businesses. China, as an economy, after all, is far larger than India. Yet, due to recent issues with China's economy and investors still doubting its potential scale for the future, China hasn't really been keeping up with India. One of China's largest companies is known as Alibaba. Now, Alibaba, as of the time of this writing, has a market value of just $187 billion, making them the 63rd largest corporation globally. That is lower than Reliance Industries and just higher than TCS by just a little bit. Yet, Alibaba has sales much more than Reliance Industries and TCS. Alibaba in 2023 reported sales of over $130 billion, whereas Reliance only had $106 billion. Alibaba had a net income of $17 billion, which is again higher than Reliance Industries, which reported $12 billion. Their assets are over $257 billion and liabilities at $95 billion. Now, Alibaba is valued less than that of Reliance Industries because of China's recent issues. Previously, the Chinese corporation was amongst the world's largest businesses. It had once reached a market capitalization of over $837 billion in 2020. And furthermore, there are also some companies in China that have larger market valuations. Tencent, for instance, has $344 billion. Kweichow Moutai at $299 billion. Nevertheless, while Indian corporations are lower than these, Reliance Industries isn't really that far off. But that's also because we are currently experiencing an Indian stock market boom. In early 2024, they crossed the $4 trillion total market capitalization for the first time ever. According to a report by Bloomberg, the market value of these Indian companies have grown by $1 trillion in just 3 years, which made them one of the best performing emerging markets. Currently, they have a total market cap of $4.4 trillion, which is higher than France with $3.2 trillion, higher than the UK at $3.1 trillion, and Saudi Arabia at $2.9 trillion. They are just lower than Japan at $6.5 trillion, China at $11.5 trillion, and the US at $52.6 trillion. So, how big are Indian businesses? They are big, and there is still room to grow. That should be expected, as India's economy is on track to become the next superpower within the next century. But anyway, do let us know what you think. Thanks for watching.